What's going on, guys and gals? Super excited to bring you this video today. This is going to be in regards to Kwenta. Kwenta is a futures decentralized exchange. And if you don't know what the difference between a centralized and decentralized exchange, a centralized exchange is where somebody takes custody of your money. FTX or Binance, Celsius, some of these were centralized and crypto entities. They were just kind of more of the same. This is a decentralized exchange, which makes it so much better because you don't give custody to anybody else. What you're doing is you're interacting with smart contracts and you're keeping the money and the contracts in your wallet. And this is the big thing about DeFi and tokenization that a lot of people aren't realizing just yet. They just think it's transferring money from one bank to another. That's not how this is going to work, okay? Crypto is so much more than that. And so I've been dealing with decentralized exchanges forever and ever and ever. And this is pretty much a new feature, a new type of exchange that just came out recently. I would say like they really started popping up this year. And this one is called Kwenta. And Kwenta is essentially affiliated with SNX. SNX is Synthetics Network. Essentially what Synthetics does is it allows you to go in and create synths. And synths are basically synthetic assets. So you have like synthetic Bitcoin. Let's see some of the things here. Synthetic ETH, synthetic gold, synthetic Maker, synthetic BNB, synthetic Bitcoin Cash. So these are not actual Bitcoin Cash, but they are pegged to the price of them. And then you're able to trade them, okay? But these are synths, and they get minted using a cryptocurrency called Synthetics, okay? And that's one of the things that gives Synthetics value, okay? And I love Synthetics. I'm very heavily invested in Synthetics. But essentially, what this has allowed us to do is it allows us to participate in futures trading. What is basically futures trading? So futures trading is essentially like options, but there is no expiry date. What I mean by that is you can basically use leverage and bet whether or not Bitcoin is going to go up or down. So let's say, for instance, if you have a $50 trade that you want to get in, that $50 trade ends up using 3 times leverage. You're actually not using $50, you're using $150. So if it goes up exponentially. But if it goes down, then you could be in a heap of shit, all right? Because the downward compounds because you're now using that $150. So all it takes is basically for, Solana, let's say for instance right here, to go down. Let's actually pull this Solana up, this chart up. So right now Solana's trading at $53. So I have a 2x leverage, which is shrunk because I'm actually in profit. And because of that 2x leverage, if Solana goes down to $24, I get liquidated, meaning my entire $50 that I invested goes bye-bye. And see, a lot of people, when they get into crypto trading or trading period, they don't understand what the liquidation price is, and they end up going in way too heavy and losing a lot of money. And I'm going to teach you how not to do that tonight here. This is a trade that I put in on Solana because I am pretty bullish on Solana. Not as I am other cryptocurrencies, but I think that Solana is going to do well during this next bull market. And again, I set up a 2x leverage. Now, if you take a look here, Solana, you can actually trade Solana at 25x leverage. And that is like pretty degen given Solana is a very speculative play right now. There is a lot of activity going on in Solana, but I tried 25x actually with the $100 the other day, just playing around with it. And I got liquidated within a few hours. Why? Because the higher the leverage I use, the closer that liquidation price is to the actual price. And that's where, again, a lot of people come in here and they end up losing lots of money. By the way, I'm going to drop the link for you to go into Kwenta, and this is a cool thing about crypto as well. You can actually create your own link here and refer it to your friends if you're a leverage trader or if you want to learn how to leverage trade. And if you use my link, it really helps my channel out. I really appreciate that. But I'm going to drop that in the description here. If you actually also, there's a link down below after signing up using my referral link. There's going to be a landing page that you can go to, sign up, and I will give you the in-depth Kwenta, how to use it, and I'll actually show you how I'm doing some trades in here so you understand a little bit more about how to use this. But today I'm going to just basically talk about the functions of it, what things are. But in that other video, I'm going to show you how to actually use it free of charge. But that landing page link is down below. That is if you use my link, all right? If you use my link. I want to incentivize y'all. Now, let's start kind of up here and let's talk about, what a funding rate is. So you can see here, I have it set to amortized over 1 year. So Solana right now, in order for me to fund it, okay, I am paying 113% on the leverage that I am using, okay? So like lower leverage, it's not that big of a deal. You can see here, I'm already up 51% in just a matter of a week. But here, I'm only paying 5.369 so far. I've accumulated 5.369 in funding fees. Now, this funding fee is a variable and it goes up and down. Sometimes it's even negative and you get paid. Usually that's when the market is going against you. So it's never going to actually be here. I probably see it being somewhere around at the end of the day, 30-some%. But right now, Solana seems to be actually climbing here. Look at that. The rest of the market is bleeding, but Solana is climbing. So now this is on the 15-minute, which means each one of these little candles represents 15 minutes. Okay, so this is on a very, very short time frame. You can actually go and extend. Usually I like the daily to see where we're at in regards to trading. So it's starting to pick up here even on the longer time frame. Anyways, back to this, okay? So this is the skew essentially. Right now it's 50-50. So skew is the total amount of outstanding long and short contracts, because what happens is when the market's going up, you're basically paying the short sellers, and when it's going down, the short sellers are paying you, okay, to use the leverage. You can see here what the open interest is, okay? The open interest is the total notional value on all long positions, max open interest. And then we have the 24-hour change here for Solana, so you can see it is down 8.11%. And then what the price is and the market price is, okay? So index price and then market price, which means market price, you're usually going to pay a little bit of a premium, but here index price, I don't know what. Let's see, the exact index price of this market without any adjustments for market skew applied. Okay, gotcha. So essentially, when you come in here, you do have to have a cryptocurrency by the name of SUSD, so synthetic USD. It is a stable coin from the Synthetics network. Very widely used stable coin, never come unpegged from what I know, which is great. And it's been around for quite some time. It's probably going on 5 years since it's been around. Now, when I have this SUSD, again, I'm going to show you how to do this in the other video, but you'll see here that right now I have $40 available in margin. So this is what I can actually use to trade, okay? Now, if you take a look here, you have multiple different things. You have your market setting, which if you do a market setting, essentially the trade is going to go through, boom, right there. You're going to pay what the market is asking for. No and if or buts. You just want to get in, nothing to wait. Limit order means you're setting up an order for to wait for Solana to hit a certain place. Okay, so let's say for instance, I think Solana is going to hit down here again. So I'm going to set a limit order for $51.62, okay? And so you can set that limit order, okay? And again, I'll show you how to do this here in the other video. And then you can set how much you actually want to invest by putting it in here, assuming you have, sufficient money. And you can manually put that in as well. Now, here you're able to put, how much leverage that you're going to invest. So again, you can do 10x, you can do 25x. Some positions here, like the gold positions and the Bitcoin positions, they allow you to go 50x, okay? And the reason I think that they cap Solana off at 25x is because it's so volatile that, it just sneezes and you end up getting absolutely wrecked, okay? I cannot have 2 Solana positions open. So it's not like I can go in and do 25x, all right? One position for 25x Solana and then one position for 2x Solana, just to like diversify my risk, right? Which kind of sucks, but it is what it is. So when I do this, it actually adds to this Solana price, all right? And you can see here what my liquidation price. So if I were to add 25x leverage, that means my liquidation price would actually come up, but this may help me earn more money in the short term if I believe that Solana is not going to go below $26. I have something called the 3-bullet system that I'm going to share with y'all in my other video on how I prevent from getting liquidated and how I'm able to stay strong even when the market's going down, okay? And a lot of these positions I'm going to be holding open for quite some time because like Bitcoin and Ethereum, even if I have this funding rate, and you have to watch it because if this funding rate goes too high, it may eat up your position and liquidate you. Okay, so you do have to make sure that you don't have that occur to you. But for the most part, typically it's not going to be this high, and it will go down. But stranger things have happened. It could happen where you have like a flat market for a really, really long time, and maybe just there's a lot of volatility inside of a range or something like that, and it could eat it up. But I haven't seen that yet, and I've been doing this now almost 4 months, okay? And in my other positions that I have, I'm up 50-70%, okay? And the funding rates are not that high, and it way outweighs the funding rate, which is really cool. So anyways, this is just a little bit about Kwenta. Again, do a little bit of research. You can click on that link down below. I'm going to send you to a landing page where I'm going to give you like a real in-depth background on how you can actually use it. And I'm going to actually perform a trade here using this account here. And you can see exactly how it works and how you can profit from using leverage trading. You have to be careful. There are risks. Okay, again, you can get liquidated, which means all of your money turns into vaporware. If my money, assuming I set up this trade, if my money were to go down here to 24.944, all of my money goes bye-bye, all right? Where like if you're just spot trading, you may just have that money sitting there and that money remains. Whether or not Bitcoin goes up or down, your USD value may go bye-bye, but at least you still own that Bitcoin. It's not going to turn into vaporware, okay? And that's the difference between futures and leverage trading and just spot trading. All right, I hope you all learned something here. Let's see you on the next one. Subscribe to the channel if you like this content, if you learned something, and let's make some money. Become your own bank. I'll see you on the next one.